Nathan, welcome to the show.
I'm happy to be here, Chris. It's a great week so far.
Yeah, no, it's a pleasure to have you. Thanks for coming over. This is, for those listening, this will be a fun episode. It's kind of two main topics. We're going to talk about Nathan's career at WeWork and everything that he experienced there and kind of, where it's led to today. And then we're going to talk about his most recent career doing an HVAC roll-up. So we'll have kind of two parts here. So let's just start with kind of setting the stage of kind of how did you begin your career? How did you get to WeWork?
Yeah, it's so I started college in 2001. First semester, 9/11 happens.
Oh, wow.
I come from a very military family. I'm one of the oldest of 7 kids. I'm a twin. And my twin brother had already joined the Army before that. And so I'd gotten in a little trouble my first semester of college already. And so I figured I was going to join at some point in one way or the other. And so I took off for the Army, had an incredible 6 years active duty, and you just learned a lot about leadership, did a couple years in Iraq. And it came out of that with a love and thirst for real estate. I used to send like love letters home to my wife. I'm a super nerd, and it'd see like, we lived in a 4-plex at the beginning. I'm like, man, we could buy one of these and then we could snowball it with the cash flow and we could start doing another one. And like literally like pages and pages of like cash flows. Like, look, we could do a 2 or 3 in a year. And so like, definitely a nerd. And so like that kind of started my like love for real estate. My wife's family also has a bunch of rentals as well, like 60, 70 units.
Damn.
And so, went from there and I landed at Lockheed Martin. After college, I went back to college again, finished, went to Lockheed Martin, and I was like, oh, perfect setup, great place for veterans. I love it. And I hated it.
Yeah.
It's an incredible company, but really poor fit for me. Ultimately, regardless of whose name's on the building, you work for the US government, and that is slow. So I ended up actually starting my own business while I was there, moving to a night shift. So I'd get up, I'd go to work at like 3 p.m. And work till about 3 a.m., get up, do my business from 7 till about 2:30.
Oh, wow.
I did that for like 8-9 months, and then almost killed myself on the highway driving home in the middle of the night, and then took the leap. And so that was a property management company, first kind of entrepreneurship thing, flipping houses to pay the bills. Kids like to eat every day. I got 4 kids.
Yep.
And so I got a real taste for it there. So we grew that pretty fast. We thought about selling it. We were trying to figure out, like, do we really want to do this long time or not? And as soon as we thought, we had like 5 people interested. So we just played them off each other for a while. We sold that business. And the day that we accepted like the verbal offer, someone reached out from WeWork. And from the day someone reached out to the day I started was like 7 days. So like the fastest experience ever. It was pretty cool. I literally I went through the interviews, and I was supposed to have like a whole bunch of interviews, including someone with a C-suite. And like the last guy I met with, his whole job was he was like the global head of ops, and his whole job was just to make sure I knew how to take care of a P&L.
Yeah.
And if I'm really honest, like I had never really taken care of like a large P&L. I did my own business. I did have an MBA. So I made my own P&L, brought it into the interview, and he's like, this is amazing. I've been doing this for 30 years and no one's ever brought a P&L into an interview. And so he's like, I'm not even gonna have you meet with the C-suite guy. Like, I'm just gonna hire you. Let's go. So that was pretty cool. And then the first time I met that C-suite person later, he's like, oh, too good to meet with me, huh? Like, what's up with that? Like you big timing me already. So I had to kind of overcome that. But that was my journey to WeWork, and really one of the best experiences for me in my career. I learned so much there.
Yeah. All right. Before we get into WeWork, you said a couple interesting things I just want to go through. You just said like the Army, one, thank you for your service as always. But you just said it taught you a lot about leadership.
Sure.
Are there just like a couple things that come to mind, like what you took out of there that you might not have learned had you not gone to the Army when it relates to leadership?
Yeah, I think a lot of people have heard of extreme ownership and kind of like how well Jocko articulates this.
Yeah.
But when you're 19 years old and you're in a foreign country in the middle of a war zone, it's you learn a level of ownership that you didn't know you could do, basically.
Yep.
And in the military, the expectation was like, you own everything. So Chris, if you were my soldier and you went off and you got a DUI and you're in jail in the middle of the night, like guess who's picking you up in the middle of the night, and guess whose fault it is? It's my fault.
Yeah.
And so like I've got a lot of funny stories. I got my like ass chewed out from the very first person who was the senior enlisted advisor to the Joint Chief of Staff. So they created this position. And it was I had done like a whole lot of work with this soldier, and this soldier ended up going to like a Soldier of the Year competition. Just kept winning, and you get asked questions, kind of like trivia. And so he goes to these boards and he gets asked questions, and he went to 2 boards in a row. He won one and he lost one. So this is at like the Fort Hood Soldier of the Year level, and then a level past that. And I was his sponsor. So I was the guy like mentored him, but he wasn't even on my team. Like I spent all this extra time with him. And he won one and lost the other one. And the theme between the two is he missed current event questions both times. So we spent so much time the second time on current events, and he still missed a question. So this command sergeant major was like, Lenahan, you are a piece of shit. He's like, if I was king for a day, like I would put that guy in charge of you. You don't know how to lead, like all this stuff. And I had literally put hundreds of hours into this person that wasn't even on my team to make sure he was successful. And it was like, it's one of my favorite stories now, just because, like you get to own it. You get to own it at the highest level. And so I got to see someone succeed. That soldier was young. He got a free car for a year, which is super cool.
Awesome.
And so, from that level, you just learn a ton of ownership. So that's one of them. You learn about like disagreeing, but still acting.
Yeah.
And so I love this idea of disagree, commit. So like when I talk to my teams, it's always about, hey, like tell me everything that's wrong with this. Tell me I'm an idiot. Like, I don't care. Let's talk to it. Let's get to the best idea. And then let's freaking make a decision and move on.
Right.
And I didn't realize the Army taught me that until later on, where you're like, man, there's all kinds of crap I didn't agree with. And like, we still, took the orders and we did what we were supposed to.
Yeah.
And so I think that one has actually taken me really far. Is there's no ego. Like, I don't care if I come up with the idea or if it comes from someone else. And so I think that's something that's really benefited me well. And then lastly, like, I could laugh in any situation. Like the worst things, like instead of crying, you laugh in the military, I think. And I think that has taken me a long way, where I find humor in anything. And I think it's actually a very underrated leadership quality.
100%. Thank you for sharing that. We actually, extreme ownership, every employee at Fort reads it in their first 60 days of joining the company.
I love that.
Accountability is one of our core values, and that's kind of to the ownership thing. And then the second let's just talk about this property management business for a little bit. Huge listenerships in the real estate world. Can you just describe what you were managing and kind of the size of the company you got it to?
Yeah. I mean, it's nothing that exciting, but we started off from scratch. We did single family homes. So just really, me and my partner both had a single family kind of rental portfolio. And we were, looking to build our kind of, I guess, little mini empires, as you would. And so, my background, my little degree from college is facility and property management. So like, I love it's like the coolest degree ever. So I learned a lot of this stuff and I got to do it in practice. And so, we just jumped in. We went from, 0 to over 150 units pretty quick.
Okay.
And that's when we started figuring out, like, we started getting in a small multifamily at that point. And we were just really wondering, like, hey, do we want to do this long term? Is this worth it? When you're serving 2 masters, the renter and the landlord, it becomes really, really, really painful, especially when it's a B2C kind of thing, because everyone thinks they're the exception. Everyone thinks they're special.
Oh, yeah.
Everyone's got a sob story. And like, I'm pretty empathetic on a lot of those things, but at some point you're like, man, just get me out of this.
You gotta run a business.
Absolutely. So that was it. And then also, like, the other lesson we learned is, like, we grew really fast and we did not capitalize it the way we probably should have, and so, like I mentioned earlier, I have 4 kids. They like eating every single day. Turns out multiple times.
Yeah, they're human.
Right. And so, so we made a conscious decision that, hey, I think we want to do something a little bit different. And if we're going to do this again, probably straight multifamily if we go after it again. So, we reached out to a few people and we got bought up by a larger private equity backed company that was consolidating the market.
Yeah. Did you, when you went to sell, did you hire like a business broker or somebody to list it?
No, we did not.
So you just reached out to like other property managers and said, hey, we'd be interested in selling?
Yep, pretty much.
Can you describe just for a little bit kind of how your business was valued and how the transaction actually happened?
Yeah, I mean, we end up going like sell the book of business. So not even a full asset sale. Like, you just go after, hey, here's a contract, here's what they're worth. We end up doing an earnout, give us the greatest value where, based on like, hey, what are you actually charging for management fees? What's your actual revenue per unit? And then like creating a valuation on top of that, like out of that on average. Mm-hmm. And then we had a lot of great properties and like, our biggest, we had a lot in Arlington, but we had a nice pocket in Dallas in University
Park.
Yeah, Park. Sorry,
Yeah.
I lost it for a second there. In that area, and so that really helped us of trying to get someone trying to get a foothold. So this company didn't have a very strong presence in DFW yet, and so they were just looking for some kind of foothold to get. So that's what we anchored on was the higher end properties that we were taking care of, and then we did have some multifamily that we were taking care of at the end there. So as far as valuation, yeah, really getting in specific. So we had, I think our base was 12 to 1,300 a contract, and then you had some earnouts that could almost double that.
Yeah. And did they do and I did an episode with Peter Lohman. He talked a little bit about this. What he was actually buying them. Was there some value put on by the end of the first year after selling it, whatever churned or whatever owners,
exactly.
They don't have to pay you for those basically?
Yeah, there's an attrition rate that goes. We actually had 100% retention, which I think goes to show. I think we did a pretty darn good job and we really enjoyed it. But 100% retention. So we actually got every penny of the earnout, which was really exciting to see, overall. But yeah, that was exactly how it was laid out.
All right. So you become Mr. P&L. You go and interview at WeWork. Will you just set the stage for the size of the company, kind of where it was in the life cycle, maybe what year you joined and kind of what you were hired to do to start?
Yeah. So I joined late 2016. I was employee 1,200-ish, somewhere in that ballpark.
That's big.
It was decent size. At the time I was hired as the head of operations for the Southern US. So,
okay.
I think a glorified title for essentially director of facilities, more or less. That was my background and I really enjoy it. I really love the intersection of people, real estate and technology. And this seemed to be even more than I thought it could be. And so at that point we only had 3 locations in the Southern US.
Yeah.
3 or 4. And we were growing quickly, so that was the reason I was coming in. We had a regional GM who was incredible, and but he was very young too, and so I was, I think, helping him just as a leader a little bit, and then the operational prowess, getting systems. So my first day, I got my laptop. Actually, laptop didn't show up. Second day, laptop finally shows up, and hey, here's our first task for you. We fired our cleaners across these 5 locations and cities. We gave them 30 days notice, and we're about 20 days into those 30 days. So we need you to find a new cleaner. We need it to be about 25% cheaper than what we had before, and we need it to be better. I was like, oh okay. So I kind of built out the model of what we needed and how many hours or square feet you're cleaning per hour, at the cost, and try and baseline that off of industry standards, which is really hard to do in a very dense, occupancy building that's all freaking glass.
Yeah.
People put their hands everywhere. So it's hard to keep it pristine.
Yeah.
And so that was kind of my first wave of jumping in. And this was a role, head of operations, that they were kind of bringing in across the country at the time. So that was the first foray. I jumped in and it was freaking nuts and it was incredible and it was fun. And I got to make an impact from day one.
Yeah. Okay. So just to confirm, when you started, that y'all were in 3 or 4 markets in the South, or you only had 3 or 4 locations?
Yeah, we had 2 in Miami. We had 1 in Atlanta. We had 2 in Austin. So 4. And we were about to open, because 30 days in is when I opened my first one.
Okay.
First location. Yeah.
Okay. So you, your first day on the job, you're kind of thrown into the fold. What was the job kind of in the year that followed? Were you because y'all were opening locations, it seemed like every week that I opened the Business Journal, there was a new location opening.
Yeah. It was just as crazy as you could probably imagine. I think I traveled 80% plus my time. If I wasn't on a plane, I was in an interview pretty much, or I was meeting with a landlord or walking real estate. That's pretty much what it was. And it's dealing with the details of a negotiation of, I can tell you the biggest questions, for instance, in Texas are okay, how much does it cost? What's my commute? Where do I park my car or my big ass truck? And the parking. Oh man, I know more about parking than I ever want to know in my life, just because it became such a constraint for success of a building.
Yep.
I'm sure we'll talk about that later, but so yeah, we went from those 4 or 5 locations, I joined in like the late end of the year, so October timeframe. So we opened another one in Domain in Austin, and then we just started rapid fire. So like we were launching cities. I think I ended up launching, like being part of like 12 or 13 cities that we launched across the country. I think I did probably 50 to 55 ish openings of locations in less than 3 years.
Yep.
Growing from we were probably like 4 or 5 million in revenue when I joined to 200 plus on run rate when I left for my region. So,
okay, there's so much to ask.
Yes.
When you joined, just to be clear, in 2016, was it already in place that like we're going to take over the entire world, and that's what you thought you were joining at the time, or did that happen kind of once you had joined?
Yeah, it's there was definitely a little bit of an aura of that.
Yeah.
Like in our, I think in like actually running the stuff, there's a little more like tempered expectation of like, hey, we have to be the reality on the ground.
Yeah.
To slow us down. So, I think I won't say there's a healthy balance because we got trumped a decent amount, but like, I appreciated like the like aggression and like how much we wanted to grow. Because if you think about it, there was an intention to have scale and value, like a brand like you would appreciate, like a Marriott or a Hilton. Like if you have enough locations, people will use you even more, right?
Right.
And they can hop from locations, and there's this flexibility. I think there's like a really wonderful vision around that, and I think that persists today. So that was like the vision they were going after, of we have this physical space, and then you can continue to bolt like additional value on top of it.
Right. You said that you were like on a plane, touring, doing all these things, or you were interviewing. When you're in like hyperscale, and I've never been in that situation, I really haven't had a lot of folks on the podcast that have been in that situation, but how do you like build a culture and like systems and processes when there's just new people joining the fight every single day? Like, what is that like?
It's crazy. It's fun. It's challenging. It's stressful.
Yeah.
I think it all starts with those first few hires. Like,
Yeah.
what example are you setting? The GM that we had in the beginning, he was just wonderful. He had grown up in WeWork, so he knew what was the look and feel of it. And then I think I got a chance to come in and have a little more of the experience, like put it in action and like put a little more process. I'd love to tell you like there's this beautiful like interview process that works for everyone, and there isn't.
No,
like there just isn't. I would suggest that people are far worse at interviewing than any of them think they are.
Yeah.
Myself included. And but it came down to like attitude, willingness to believe in the vision and who we were as a company. Are you willing to work your tail off? And then like sharing that, hey, we're investing. Our growth means your growth.
Yeah.
And, if you put in the time, like there's incredible opportunity here. So I think I had a lot of success building that team early on. And I'll actually honestly tell you, like the thing I used to say to the team all the time is like, our greatest risk is not competitors. It's not necessarily how fast we're growing. It is, if we outgrow our culture, then we're in big, big trouble.
Yeah.
Because at the end of the day, this is a people business, just like every other business.
Yeah. And when people are coming on that quickly, there's one part of it, which is the team is identifying positions at rapid pace that need to be filled, and then you're filling them. Even at 1,200 people, are a lot of the people that are starting their first day in similar situations to you, where there's not this like, 6-month training program and like you kind of limp your way in. It's like, hey, here's your desk, here's your project, good luck. This is who you report to. And we're going to try and provide as many resources as we can to making you feel successful.
Yeah, I think it's a little more contained in that regard, because if you think about the vast majority of our roles, especially on like my team, is I help lead community team, and the community team is the people that actually occupy the buildings. They're the ones there's the faces you see, the ones that take care of you, answer your questions. And so those roles they were much more defined, specific, and we had very specific ratios of like, hey, if you are at 40,000 square feet, this is what you get. If you're at 60,000, this is what you get. If you're at 120, this is what you get. And so I think that piece was laid out pretty well.
Yeah.
And there was very like rigorous kind of expectations and like norms, that you did like a stand up every morning and you talked about what the plans were and who was moving in and who was moving out. and like what tours were coming in and just understanding like that whole rhythm. But a huge part of it was like also just establishing what is expected and what you can and can't do. So like, my boss at the time, he would do everything. And I was like, all right, like, man, you're running a multi-million-dollar region now, and it's going to be much, much bigger than that soon. You can't do that anymore.
Yeah.
And your boss doesn't really like it when you tell them they can't do something.
Yeah.
And it was funny because like I was an operations guy and like I was selling. So when we were open 1920 McKinney, I'm doing hard hat tours, like anything I can do. And I sold my first offices my first week, so I could always hold that over the sales guys just in case, or gals if they were slow. But he's like, no more sales for you. You're not allowed to do that either, And so, I think we were really kind of carving out the roles. But even in that regard, like my relationship with my GM and how we ran operations along with community was a bit different than any other region too, because we worked much closer together.
Right.
And there's a lot more overlap. Whereas it was much more defined, like, hey, you're the facilities guy, just go take care of facilities.
Yeah. And when you're growing that quickly and you're picking up locations, was the MO like, hey, here's a certain set of data criteria. Any place that this data exists in harmony, open a location, basically. Like, how did you know where to open and like how quickly they needed to start opening?
Yeah, I mean, it's a great question. Like we had goals every year. So like for me, about 9 months in, the South originally was anything from like Virginia South over to Texas West was all part of the South.
Okay.
Now that we overgrew that pretty quickly. So about 9 months in, we actually split it. I took over Texas as like the GM. And then I had a lot more control over the plan, the budget, like where we're going. And look, there is as much data as you want, and so there's lots of things. There's easy markers. So like if you're within 3 miles of a Whole Foods, let's start talking. Like that's probably a great demographic. But I think I remember seeing some stuff on Twitter from you is like people are like, did you guys do any kind of data or modeling or anything? It's like, hey, I understand that a lot of people think we're probably just a bunch of dumbasses and, like, how do you get away from this? But at the end of the day, like you can have as much data as you want, but someone's got to make a decision.
Yeah.
And so like it goes back to the same thing as like location. Like I can overcome location maybe 10, 15%. Like if you have an incredible team, you can overcome how good the location is, but maybe 10, 15%. That's a personal opinion on that. Yeah. But like, if you look at, let's say in the DFW area, what are our best locations? Well, I can tell you there's a theme that's going to keep coming out of here. You look at Clear Fork, you look at Legacy West, free parking, great locations, amenities that are walkable. So boom, 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 you're crushing it, right? Yeah. And those are the themes that you really start seeing in the South, especially, and then even out to like maybe LA. But parking was one of the greatest constraints for us because you do a per desk price, and then you tell them you got $150 parking in downtown Dallas at Thanksgiving Tower now too, and they're like, peace. Yeah, I'll see you later, man. Like I can afford to park my car, I can afford to buy the desk. Like you pick one. So, I think that is a huge piece of like the data criteria. But I mean, like anything you expect, like, hey, what are 3-year paybacks? What are IRR? What is the actual cash up front? What is, like anything you want? Like we had it for markets we're going into. We spent lots of time with brokers walking it. But it honestly comes down to like the simple things. Is it a great location or is it not? And is it, parkable, and is it easy access? So like, I'll give you an example of one that didn't work out as great. Sundance Square. I picked that location with my team and I thought it was gonna be great, and it was not.
Yeah.
And mostly I would attribute most of that to accessibility and parking.
Yep. It's amazing. We've actually talked about this on other podcasts, but parking in Texas is like, if a Texan actually goes to like New York City, they don't mind not having they're obviously on vacation or whatever, but they don't mind not having a car. They'll walk like 30 blocks to dinner. They'll walk like, to Central Park. But in Texas, if you cannot like pull up to a restaurant and be on the front curb right outside the front door, you will literally just go to the next restaurant. I think like West 7th, they've done well, but the fact that you have to park in a parking garage 3 levels high and walk down to the restaurant is such a mind block for Texans. It's a bizarre thing. Well, I want to just continue on that for just a second. So, I don't think that WeWork was filled with a bunch of idiots. You can't raise $15 billion with a bunch of hooligans. But, I'm taking to the end and I'm going back, I think at the time they were going public, they were losing $4 or $5 billion a year. the question's really more framed as, was SoftBank already involved when you joined? And like, what happens when somebody brings 5, 7, $10 billion to the company and is like, spin this shit as quickly as you can and keep going? Like, that's maybe where did you guys model this versus like, you were told like, spend this money, like we have to grow. Was it overwhelming as SoftBank kept just pumping more money into the company, or was it more like freeing?
Yeah, it's a wonderful question. I believe I joined shortly before like the first like real tranche from SoftBank came in.
Yeah.
And I think it was already in the works, but all it did was just mash the gas pedal.
Yeah.
It's like if you look at the economics of like a 4 building EBITDA, and you go down to like a great location in Austin or hell, like even in Salt Lake City or like wherever you want.
Yeah.
Great location. And if you looked at it, you're going to be thrilled with what you see, right? Like you're going to see something really, really impactful there. Now, when you start adding the overhead of, an incredibly large, construction, design, and development team, when you start adding like the marketing expectations of filling these buildings as fast as we build them,
Yeah.
you start adding all these other things, like those economics dwindle pretty quickly, obviously, right? And I think you see a lot of success on like the regional level and smaller levels where, like a Nick Clark and Common Desk, doing well and trying to figure out the formula. I mean, it just created even more acceleration of being the largest physical product on the planet, basically. Yeah. And every month you get that like email saying like, hey, we opened 40 locations this month. And you're just like, you really think about it and it just feels mind boggling.
Yeah.
Because I think what people underestimate is like the pure level of talent that we had at WeWork. Like it's unlike anything I've ever seen. Like you pick a role at any company, and I bet you we have someone as good or better at WeWork doing that same thing.
Yep.
And so like what is the repercussions of SoftBank? I think it came back to creating something that has to move so fast. And when those things move so fast, the discretion it takes to take time to make sure incentives are aligned, I think is really, really hard. And so like you see a company growing fast and you have a real estate team that is incentivized on signing of square footage leased.
Yeah.
Great. Well, I got to go operate that the next 15 to 20 years and I can't fill it up, but they don't care.
Right.
They do care.
Yeah.
But incentives say they don't care, right? Like they're incentivized to go lease, whether it's a great location for us or not. And I think that's like one of the truest things and most absolute truths I've seen in my career now is like, it's almost impossible to like truly align incentives. But incentives are so powerful and they are speaking 24/7, 365. And it is the story. I guess it informs the story that people are telling themselves when the leaders aren't there of like, I just got to sign the square footage. Or sales just got to sell space,
Yeah.
And so like I had plenty of fights with my real estate team trying to force me to take stuff that I don't want to take because they got to hit their goals, or my sales team trying to sell a whole building to a fancy tech company at a discount in like one of my best locations overall. And I'm fighting with them too.
Yeah.
Because I saw myself as a steward of like the fiduciary responsibility to make sure that we're profitable
for sure
one day. Right. And so I think those tensions were the hardest part of the acceleration, right?
Yeah.
Because I believed in our mission. I believed in the people that I worked with. In the Army, you learn, you don't fight wars for the country. You kind of do, but like you fight for the people next to you.
Yeah.
Right. And like, that's what embodies, I think, so many of our values, and WeWork was no different than that.
Yeah. When you were saying that, like you go to Austin, you have a 4-building EBITDA and you're looking at it and it looks great. And then I knew that you had started your own like furniture building company and had marketing and you were buying all these tech companies. We don't have to go too deep into it, but when you're looking at that EBITDA and it looks great, is all this other stuff that you weren't in control of, like at that point, like that was coming over the top?
Yeah. I mean, look, there's, I think they did a pretty good job actually of trying to shield, what you could see at a building level for your region.
Yeah.
And then like how is burdened up there.
Yeah.
Is like, they didn't necessarily do like a prorated share of everything so that it like equally burdened the building based on like the need. But,
yeah.
I think a lot of those things were just distractions. And I think one of the best things I've learned as a leader is I've learned what to ignore and not to worry about because it's not in my control.
Yeah.
So I'm not going to worry about that. It's one of the hardest things to teach in the world, though. I tell you what, like the amount of effort and stress and anxiety from my team on, hey, here's the expectation, here's what we're doing. And they're like, well, I don't control sales. So I literally had to come up with like my own construct of like, okay, this is how we're going to think about things now. So every role, we started doing this thing called you, me, we. So with a director who might lead DFW, this is what you do. This is what I do. This is what we do. And then I did it for between them and sales, between them and construction, between them and real estate, because, the larger my region got, the less I could do,
Right.
And so I was empowering my team a lot. And so there's you, me, we, and then the other piece was like, okay, here's your buckets. Here's what you control. Here's what you influence, and here's what you stay informed on. And so like in enterprise sales, we had a huge goal to become a 50% enterprise company.
Yeah.
And so large companies taking large pieces of space across the world. And to do that, you had to have some loss leaders. And I had buildings that were loss leaders to get that foothold. So I'd have to teach my team like, hey, on enterprise sales deals, like you need to stay well informed.
Mm-hmm.
You can influence a little bit, but like most of the influence stays at my level or my boss's level.
Yep.
And I think that was really hard because, like they had so much pride and ownership of their buildings. And, we had some good competition too of like who had, the best happiness scores for members or most profitable, like whatever it was at the building level.
Yep.
And so then they couldn't control stuff because we stuck an enterprise, member in their building that wasn't a great deal. And, it blows up.
Got it. Let's just talk just a little bit about kind of what we've kind of talked a little bit about it, but just like what a great location looked like. Like if you left today to go start your own co-working, what things mattered? And then I want to talk a little bit about what things mattered to the landlord. So for y'all, what was like, if these things lined up, we knew we had a good location, and I know it depends on who the landlord is, what their situation is, but as a landlord myself, I'm really curious what they were thinking as all this was going on. So let's start with what WeWork's successful location matrix looked like in the South.
I think there's tension here between what was successful from New York and then like trying to, I think influence that strategy, locally. Like we wanted to be a local company wherever we could. What does the criteria look like? So, I mean, you can think of it from a couple ways. There's like the financial kind of situation. There's what the landlord wants. There's what we want for our members. And there's simple things like, hey, got to have great parking. So like a high ratio of parking, ideally free. We want to put as little cash in as possible, obviously. So like large TI packages, like very large TI packages. And accessibility. So like 24/7 access, no limitations on who comes through the lobby, like that kind of stuff. Because like the first things people ask will be like, are you have some goofball in flip flops and board shorts cruising through my Class A incredible lobby, where that might be okay in like a San Francisco and Dallas, man, like a lot more hesitation on the look and feel that they're projecting by walking through a lobby that they just redid and spent a whole lot of money on, and so I always found that piece fascinating. But they have a brand that they're protecting, I believe. And so those are things that made mattered a lot to me, like really simple things. Like I never want my members to have more than one key card. So if you have an expectation that they need a key card for the elevator and parking, and then I have to give them another key card, that's not going to work for me.
Yeah.
And so if that means I need a second reader for WeWork, we'll install it in the elevator, we'll install it wherever we need to. But it was all in pursuit of like, how do we create the most simple experience for them to get to their space?
Yep.
And like, as an example, I came here today and your podcast and your office are in two different buildings, right? Well, there was no parking in the podcast one. And then I drove a little farther and saw Fort Capitol. So I ended up going to the wrong building because I saw signage. Signage is another one. But just getting people into the building is like one of the hardest things. Like, how do you create an incredibly simple way to get from where I park my car to my actual space? And then signage. We fight like hell for signage.
Yeah. Every building had a big WeWork in the corner, it seemed like.
Yeah. Yeah, I was gonna say like Fort Worth, for instance. Like we tried to do, I tried to do something sooner in downtown Fort Worth, and we'll just say, for
I
instance,
remember it was all over the news. Y'all were trying to get a signage and they wouldn't let you put it
we'll
up.
say the Bass family was not supportive of our signage request.
Yeah. Well, it doesn't seem like they're supportive of much going on downtown right now, but we don't have to talk about that. Did it matter how, was it just maybe density of population? Did it matter how close you were to the next WeWork?
No.
Okay.
No. I mean, look, we tried to do feedback on location. So there's markers, of course. Like a Whole Foods is a great marker for us to understand, but like New York's thesis is a lot of like walkability, do people live there? And then, they want to be in the CBD, right? Like that's kind of like the mentality. That's what's worked so well. And then you go to like a Thanksgiving Tower in Dallas and, like that's not where people want to be. It's not where people live, and so my favorite stat to use for people that don't understand is, hey, we're a metro of 7.5 million-ish in DFW. Any idea how many people live downtown Dallas? It's like 12,000 people.
Yeah, it's not a lot.
12,000 people. It's unreal, right?
Yeah.
And so like the density matters a lot. But like there's nothing more important to me in the South than accessibility.
Yeah.
So that's parking or I thought maybe valet. Valet is not, that doesn't work. So it's just literally parking. How easy is it? How much does it cost? And how fast can I get to the office?
And did it matter on the build out that it kept that kind of industrial cool vibe, or did every location have its own kind of feeling and vibe?
Yeah, there's a little bit of both, but definitely trying to keep like, hey, like we want tall ceilings, but not too tall, because if you go past, 14 feet or so, now you just think about the drywall costs. If you're doing, we had places that had kind of like a second, like a mezzanine type loft or whatever that's overlooking office space. So now you have like these open air glass and aluminum boxes that people can literally just look down into your office. Yeah. Terrible. And so we did have one like that here in Plano, actually.
Yeah.
It was pretty cool actually, but also I would never want to do one like that again.
Yeah.
So like you want very constrained, costs. We got very good at, estimating and building out space as well. Just incredible development and construction team. But at the end of the day, there's just nothing more important than just accessibility. How much does it cost for a desk and how easy can I get to it?
Yeah. I know y'all were doing a lot of enterprise sales, but you also were doing kind of maybe call it more consumer sales, just a one-off guy or a girl and their laptop. Was there anything you learned just about that community building where, maybe tenants loved it, or maybe would there ever be like discrepancies or like, hey, we're competition, or like, I don't want you looking in my office? Like, not just WeWork, this exists like across the board. I think about this all the time, is like, how did people actually think about it?
Yeah. I mean, look, our goal was always to bring people together.
Yeah.
In any way. And that was what drew most people there in the first place. And so like, here in the South, especially like for Texas, it was always my job. Like I would think like fill the building first. And so economic wise, of course, get as many dollars as I can from filling the building, but there's nothing more important than filling the building first. Because if you walk in and you see people in the space and they're doing business and they're enjoying what they're doing, and you can just feel like the energy in there, there's nothing better than that. That's what sells and lets you raise prices, as you go on. But yeah, like there's every like kind of crappy situation you can think of, from people being mean to others who overran in a conference room, to inappropriate things after hours in conference rooms, or other places, like people throwing parties when they shouldn't, and just doing things that they shouldn't. But like overall, on average, like people are incredibly kind. Most people join hoping to be able to help their own business grow and help other businesses grow and meet people. And I think that was a theme and a culture that we stay true to every day.
Yeah. No, I love it. Okay. So we get started, like we're off on a rocket ship. Was there a point where you maybe started getting, like, as the media started really highlighting Adam and some of his antics and smoking weed in the office and flying his G650 all over the world, which I actually listened to an episode. He did a recent interview like 2 weeks ago that I listened to the whole thing. I think he did a really good job explaining himself. And I know the media can sometimes take it, but maybe let's just hear it from the horse's mouth. Like, Was there a point that you maybe remember waking up or going, I'm not in Kansas anymore? Like this is kind of turning into something different?
Um, I think the circus around the IPO, like
Yeah.
I won't say it was just not necessarily just Adam, but just the circus in general, like the whole to do. I think that's when I became like a little more disillusioned. But also like when we're being when you're fighting against things that some of the growth that just doesn't feel, I won't say comfortable, because I'm not necessarily looking for like this like comfort level, but that doesn't make sense. You're like, hey, let's say you're doing 20 million and they want you to double next year, but you can only find space, one or two spots in Dallas or Austin. That's where you really want to be, especially Austin. And then everything else you have to just kind of fill in a Houston, right? Where prevailing vacancy rates are 20% plus. Like, yeah, I can go check the box for you, but I don't want to. And I think the other piece is like, and we learned this, and I think they continue to learn this, but just taking long-term lease obligations versus like management contracts and stuff like that. Like I was fascinated with the management contract approach. And like one of the big things I want to do is like, what are the most common kind of management contract agreements? What kind of waterfall, like how does this cascade down between us creating upside for landlord and ourselves, and we all share in that benefit. And we had some in my region, which was wonderful, and they had done very well. And so it was like something I really, really wanted to do was like, how do we take this incredible data set we have across the world? Let's take all the historicals and let's go run them through a model showing the management and see how it would have done for landlords and ourselves. And I think that could have been really, really interesting. And I think they're really moving towards that model. I don't stay like super close to any of it anymore, but like, I think management contracts are like really the future in a lot of ways versus just like tremendous long-term lease obligations.
Yeah. Cause that was always the naysayers would say like, you have this lease, the landlord's going to know your margins at the end of the lease. And when it comes time to renewal, they're just going to raise that lease enough to cut that margin back to a normalized rate. That was kind of the thought.
Yeah. I mean, I did some lease renewals and like, that wasn't necessarily the case.
Yeah.
So it just depends. I mean, it's been a crazy few years too. So like, who knows how it's all working now with the pandemic.
Well, and I actually skipped this part. I'm going to go back a second. Yeah. So we talked about what mattered to WeWork. What mattered from the landlord?
Yeah. So, I mean, it's,
you talked about like consistency of the building and feeling the vibe, but like from lease terms to which floors you could take to like, what were they hesitant on? What did they love? It probably evolved over time as WeWork became more known, but what was...
Okay. So my favorite conversation, I don't know if this is, that I had on real estate was with Jerry Jones. So like I got to sit down and talk real estate with Jerry Jones one time. And that was really fascinating because I think his questions were so grounded in like reality, like what landlords care about and what things cost and like what image does it portray. And so, and I just remember like these questions always stay in my head, and it was simple things. It's like, okay, well, when do all your people come in? When do they leave? Are they going to be creating a 15-minute, 20 minutes delay to get out of the parking garage, to get in the parking garage? Because that's not an experience I want any of my people, at any of my real estate to ever go through. How often do they use elevators? Are they coming in and out all the day? Do you have any kind of data usage on that? And, and so I think there's this idea of, again, image, like what kind of brand am I portraying here? What kind of signage do you want? Because if you think WeWork signage is going to overtake anything having to do with, our brand, as a family and as the Cowboys and everyone else, it's like, yeah, good luck with that. Like, good luck with that. And so, and I think there's a lot of themes that really ring true here. Obviously, like, there's the hard financial questions. Like, hey, you guys have a lot of lease obligations. Are you guys going to just disappear one day? Are you going to go bankrupt like Regis did in the early 90s or early 2000s or whatever? So I think there's our solvency. There's questions around like, obviously like legal entities, like how do you set that stuff up? But at the end of the day is what rent am I getting and how long? That was probably the biggest ones of, their side, because rent is a fluid number. Yeah, we'll give you more TI if you pay more rent.
Yeah.
And so like then you're artificially inflating rents potentially for bigger TI packages, so we have less cash out. And in constrained markets like in Austin or San Francisco, like that could actually make an impact that ripples meaningfully.
Yep. Was was it's kind of misunderstood. There's a lot of people would say it was just a real estate company taking leases, but like the IPO and the narrative that SoftBank and a lot of the later press was showing is like, no, it's a tech company. Was it a real estate company? Was it a tech company? And if it wasn't either, was it going to become a tech company?
Yeah, like I think were we ever a tech company? I don't think so.
Yeah.
Do I believe we're absolutely like a tech-enabled services company or tech-enabled? Absolutely.
Yeah.
No question. And I think there's some really incredible work going on there. But like you can see why anyone would want to go after a tech, like I guess moniker or characterization, just because like the valuation is so much better that way. But yeah, we're a real estate company. Honestly, we tell you we're a community company. Like we're about bringing people together, helping each other, helping businesses grow. I mean, one of the best experiences I got to do at WeWork and be a part of was we created something called Veterans in Residence. We did it with eventually Patriot Boot Camp, but then we moved over to Bunker Labs, and we created this basically 6-month program where you just apply as a veteran, get free office space, free mentorship, free programming. And we do it every 6 months. And we ended up growing from one location in Denver to, I think there were 20 plus locations across the country.
Yeah.
And so that's the kind of company I tell you we were.
Yeah. Okay. I just want to spend a little time on Adam. There's a book, Good to Great, and it talks a lot about the great businesses like don't have founders that are so polarizing. And, again, I'm speaking from the outside world looking in. It seemed, and I got to give Adam some credit. When you listen to him speak, it's like he's a very unique character. Was he a great leader, and did that change over time? Like, what was your thoughts on Adam? Was he a distraction to the company at some point, or was that all in the media?
It's a good question. Like he was a visionary for sure. And I think that's probably like the greatest impact that he had on the company. And between being a visionary and a deal maker, the guy, I mean, some of the partnerships that he put together or worked to do, or like some of the thoughts he had, I think were incredible. Was he a distraction? I can tell you, I can't speak for like a New York. When you're like that close to like the mothership, it's just different than anywhere else. So like, I believe it was an absolute blessing being in Texas.
Yeah.
So I was far enough away to help stabilize and kind of create the culture I wanted to within like the WeWork culture here. And so was he a distraction? I found him not to be a distraction.
Okay.
At the very end, I think he did the right thing and stepped down.
Yeah.
And that's when he started becoming a distraction, was right around that time.
Yeah.
And so I think from my standpoint, like he led in a way that I saw him once a month on the all company meeting or whatever we did. And I thought he played his role very well.
Yeah.
Yeah.
The retreats where they would have like huge concerts, was there ever a moment where you're like, we're spending like $5 to $7 million on like a company retreat? Now you could say, yeah, but we have thousands of employees. That's kind of what it costs. It would be much less. But was that kind of weird?
It's a little weird. I mean, it's definitely different. I'm a little introverted personally.
Yeah.
I like my time to recharge by myself. And that you were expected to be there, and I mean, I had a blast. It was unbelievable just, seeing so many people that you've done like hard things with, where, like working on projects with a friend from Israel or the UK or Australia and getting to see them in person, like other GMs, I thought was incredible. Yeah, of course, like financially, I'm a little thrifty and I don't know if I'd ever be able to spend that much money on bringing everyone together, but like I have a hard time faulting the intention behind it. Because did people get in trouble and do things that they shouldn't and all that stuff?
Yeah.
Of course.
Happens at every company.
Company. Was there probably more alcohol than there should be? A lot of times, probably.
Yeah.
But like I loved it. I mean, I really enjoyed the time. I enjoyed most of the the learning that they provided and being able to like get better as a company. So, yeah, man, I'm really hard on that one. Like I feel like both sides on
Yeah.
Yeah.
All right. We'll spend a little more time on the IPO, and then we'll move into what you're doing today. So the IPO starts coming out. I think the most famous part was like the day that the S1 was released. And I think it mentioned like Adam Neumann 78 times or whatever it was. It was some word that was, And that's where you kind of said things started to get a little weird. $47 billion valuation. So what was like the team's initial reaction? Obviously, there's probably blinded by we're about to make a lot of money if this goes public at 47 billion. So I got to give like anybody in that situation the benefit of the doubt that like you have been in it so long, you're believing, like it's hard to not. The world said you're worth 47. Goldman, I think, or one of the banks had said y'all might be worth 90, or one of the big banks did.
Yeah.
So like give me like the short story of what was happening around IPO time and how it was kind of played out from your perspective.
Yeah, I think there was, like this mounting excitement, obviously.
Yeah.
Everyone's, hoping for a payday. And, I don't think anyone thinks it's the finish line. It's just it's a major milestone, right?
Yeah.
And I can't speak for a lot of other people, but for myself, like I'd become pretty wary of the valuation.
Yeah.
And like, I think the whole time I was at WeWork, it was always like cautious optimism of, yeah, I really hope I make some money off of this. This would be wonderful. I've worked my tail off, and then ultimately, like, all my stock has expired now, and it was $0.
Yeah.
And like that sucks as like a pretty senior leader. But like, would I do it again? I would do it again a million times over.
I love it.
A million times over, no question, no hesitation whatsoever. Because like the level of talent and the people, I can reach out anything you want. I've got a person probably in that tech company that you love, or like in that or that state, city, country. It's pretty incredible. But like I think people started getting wary and not truly understanding, because I don't think people take enough time to understand like what a stock option is, and like how did the valuation actually occur? What is a strike price? What does it mean for us to go? Like, is it going to be held up for, this many months? Our price is going to go down when the lockup finally expires and all the, stock starts flooding in. And so I think people were optimistic, but not necessarily clairvoyant in like what was happening.
Yeah. What is it like to work at a company that goes from like here, then the IPO comes out, and it was like all the media talked about for a couple months, and it wasn't necessarily a bunch of positive stuff. What's it like working for a company when the world is, I don't want to say, laughing, but like the world is making a mockery, and you're sitting here going like, I've worked my ass off for 5 years. I have an incredible team that I'd go to bat for. We've done everything we could to make this company successful, and the world is now saying this. Like, how do you motivate people and stay positive and moving forward when you can't, even open up your iPhone and not see something on WeWork?
Yeah, I think, you work really hard to help them avoid the noise.
Yeah.
And just ask them, like, I think this is just where being a very human centric leaders, matters. Of like, hey, do you want to be here? Like, just because of what they're talking about there, does that change why you're here? And like the impact that you're making, ultimately, I got to say, like, when the new kind of regime came in, with Marcelo and SoftBank and the new CEO and all them, I think they did a wonderful job outlining, hey, here's where we are. This is where we're going, and this is our identity. So it was very clear, like when they did the first kind of rollout, it was, hey, y'all, we are a real estate company.
Yeah.
Here are the things that matter to us. Here's our values. Here's where we're going. And I was actually thoroughly impressed. Very clear on like, here's where compensation is going. There will be layoffs. And I thought they did a pretty wonderful job of like trying to right the ship and create stability where it could feel like, the floor is just falling out from under you.
Yeah, no, I totally agree. And we'll talk a little bit about the IPO that actually just happened a couple weeks ago, but maybe kind of, one more. Well, let's talk about that for a second. They just went public. You probably still have friends that are there. I truly believe that WeWork is actually going to be a really great company in the world.
I agree.
And, we could chat for an hour on why. But can you speak at all to maybe some friends that you've heard from, or kind of the state of the business today, what you know and what you can share?
Yeah, I think these are gonna be just generalizations,
Yeah.
But look, I think it was pretty beneficial for most of the people that stuck through kind of the turnaround.
Yeah.
Now, it could have been a lot more fruitful if the pandemic hadn't hit, and they actually continued on the trajectory that they were, 2019 and prior. But I have very optimistic outlooks of where they're going. They continue to, I think, get fit and offer more things that are valuable for customers. So like I don't even know what the real names are, but it's like the all access pass that you can go. You pay a couple $100 and you can use the WeWork anywhere in the world.
Yeah,
I think that's pretty amazing. And then you can see like why scale is so important there, right? Because if I'm going to, Paris or Tokyo or whatever, it'd be great to have a place to be able to, just pop in for a few hours to do work. So, I mean, I'm very optimistic overall. Like long term, I think they have a great leadership team, and like they know where they're going, and I believe they're going to get there.
And when they made the transition and brought in Marcelo and the new CEO, wasn't he the CEO of like Brookfield or some big?
Yep.
From the time they took over, how quickly were they recommunicating back to the team? Here's the new plan. Was that days, weeks, months? How quickly did it happen?
Man, I want to say they jumped, like Marcelo jumped in, and I want to say like 30, 45 days. I think they kind of sent out just like, hey, we're going to jump in. We're going to learn everything. We're going to put a plan together. We'll talk to you soon. And I want to say I was really impressed. I think it was 30 days or 40. I don't recall exactly, but I can just tell you how I felt. And I remember walking away like, hey, I'm pretty impressed so far.
Yeah, that's awesome. All right, man. Thank you for sharing. That's fascinating. And like I said, obviously what you read in the media can be very distorted. And I truly believe WeWork is actually going to be a great business. And for what it's worth, you have a big part in that.
Thanks.
So, all right. So now you left WeWork, and now you are doing something, I would say, totally different. You are embarking on a HVAC roll-up, we'll say.
Sure.
Explain what you're doing, kind of what the idea and thesis is behind it. Why this?
Yeah. So, I mean, first step, we bought our first HVAC company, me and two close friends, same guys I did the property management company with.
Okay.
They actually end up at WeWork with me too. So just like we love growth.
The band's back together.
And the band's back together. So, so having a lot of fun there. HVAC's first step, that's, we'll call it like the service side of like a much bigger vision. And that vision, like we're calling it homework. And essentially, we are trying to, create enough data around a home to make it much easier to manage and operate. So like, I just think home services, if you want things fixed or renovations or whatever, is just way too hard out there.
Mm-hmm.
So, so our approach is we have three things that we're looking at is data, technology, and service. And so right now what we're doing is we're trying to collect enough data. So we're actually using some of our HVAC techs to collect data. So they collect data about air filter sizes, your equipment. And so the idea would be like that lives in a portal. And as we collect more, then I can give you easy quotes and provide you service when you need it, just at the touch of a button. Ideally building a platform of trust, similar to Amazon, how they started off with very simple things, books, DVDs, things that are easy to fulfill. And they did it all in-house. We're thinking similarly of like, how do we build a platform for homeowners and start in-house? So like skilled trades, plumbing, HVAC, electrical, we'll do in-house. I think there's a tremendous amount ability to build trust there, and then potentially add third-party fulfillment later on, kind of like Amazon did. And so, but there's just going to be this huge piece of data. So we get data every time we visit. We're going to be talking, we're looking at home inspections too, like what a rich, source of data when you could go into a home when it's about to be purchased.
Yeah. Or
new home construction. So now you have, floor plans, you've got surveys, you got drawings. So if you wanted to redo your master bathroom, I already have all the dimensions. I can give you a rough quote. You can pick your materials like Amazon, like right in a cart and deliver it. And then, we can add subscriptions if you want filter subscriptions or pest control or, fertilizer. Like that's kind of the big vision. So HVAC is kind of our playground to learn how to fulfill that. And like the first thing we're doing right now is just creating, can you schedule online? So super simple. So anyone can schedule online with our service now, which sounds super simple and it's actually super hard to do, especially at scale. And then the second one is, could you get an instant quote based on your unique home address?
Yeah.
Just take a picture of like the serial number, model number on your machine, and we're trying to get you a quote within 60 seconds or instantly. Obviously, you got to confirm it based on any other kind of conditions when you get to the house, just because
You don't know what the actual problem is.
well, if they're just replacing a system, you got to start with like super simple.
Got it.
Hey, if you want to replace your system, this is what it costs. But like we just went to a house the other day, and it's like this big southern plantation. They've got like hidden rooms like behind like bookcases and stuff, and they got an AC unit in there. It's like, what the hell are you doing here? Like, how am I supposed to service this thing? So you just never know. You got to add like, I guess, a little bit of the labor costs in there that may not be standard, but that's the vision of homework, and HVAC is kind of the first service step because it's super simple. Not super simple, but it's relatively simple. It's the same 10 to 15 things that are wrong every single time, for the most part. And so we're trying to figure out how do we apply some of these things there and then just continue to expand.
And every house has an HVAC, at least in the South.
Yeah. And it's in Texas could literally be life or death. So,
okay. So, just so I make sure I heard you correctly, the initial, phase one is we're just buying an existing service business.
Yep.
These companies install HVACs and maintain them.
Correct.
And from there, we are going to start layering in technology that will allow us to start learning more from what we're doing day to day.
Correct.
And then from that data, we open up a whole new world of kind of what's possible with inside the home.
Exactly.
When you're looking for these HVAC businesses, is there something that matters? Do they have to be a certain size at this point, a certain amount of customers, region? Like,
I mean, there were certainly criteria that we wanted to do. I think the market has suggested that that's it can be a little more challenging. I mean, we wanted at least like $1 million EBITDA on these companies, so that's going to put you more at like $5 million plus in revenue on average. That's our ideal target. Because if you start getting to like, especially like 2.5 to 3 million in EBITDA, like the multiples just start accelerating significantly, and then you're fighting against PE, like meaningful PE firms. And that's not the space we want to play in. We'd much rather have like just a decent base to start from, and then we can grow pretty fast organically, we believe. So, I mean, our first one we only bought, it was like a little over $1 million in revenue.
Okay.
So just literally something small to start with and build off of.
How is a company that's $1 million in revenue valued?
Yeah, I mean, typically around, 3, I think you can get between 3.5x multiple.
Okay.
On
EBITDA.
Yeah, on EBITDA. Or, seller's discretionary earnings, like however they want to actually, play it, just because, they like to do a lot of ad backs. So you got to fight them on a lot of that stuff on what the real number is. But, we end up on this one, we actually got a great deal. We end up doing, I think, just right around 2.5 multiples. So got a great deal. Owner's been incredible. We're about a month in so far, and looking to grow. So having some technicians join us here over the next week or two. We're pretty excited to add, and then off to the races for next year.
Is the owner maybe in that one, or your criteria, you wanting them to kind of stay on board for a little bit after close, or are you all just taking over?
Yeah, I mean, 30 days is pretty typical.
Yeah.
But I mean, he's been wonderful in that, like, I feel like he's a mentor or guide if we need it at all. So like, if I want to call him 6 months from now, he's going to pick up the phone.
Yeah.
And so that's the relationship I want. I don't want him in the business though.
Yeah.
Like, I think one thing I've learned over and over and over again is like, nobody likes long transitions.
Yeah.
Saying like, 60 days, that sounds great. And then you're like day 15, you're like, son of a, like, just get out.
Yeah.
I just need to do it myself. I need to do it myself, and I'll call you if I have problems. And it is that's one of the lessons I feel like I learned over and over and over again of like, nobody likes long transitions. And then defining what long means continues to be like an evolutionary thing for me, because you're like 60 days. No, 30 days. And you're like, no, 2 weeks. I think 2 weeks, like a 2-week notice for leaving jobs. I feel like that might have come from a lot of like practice, like a lot of repetition, saying like, hey, staying a month after you say you're done or ready to move on, too long.
Yeah.
So 2 weeks might be like the perfect of like in-person kind of transition. And then like, hey, I can call you after that.
And even people that, know when somebody's put a 2-week notice in, it depends on the position and how long they've been there and the reason that they're leaving. But like 24 hours after they've said that, it's like the mindset of the team is already like, we've moved on.
Absolutely.
Unless it's some unique position. So I can totally kind of get that. People, eat up as much time as you give them. But if you give 2 weeks, it probably happens.
Yeah, they want to get to their new norm. Like,
Yeah.
hey, what's the new norm? Like, how do I make sure I navigate this well? And even at the last company I was at, like, when we decided I was leaving, man, it was in November, and we're like, oh, through the end of the year, and I'm like, okay, that sounds nice, but like, and it went from that was like 70 or no, almost 60 days to like, guys, 2 weeks now. Like, I think we're done here. Just be available with phone call, and and I think that is actually the best for everybody.
Yeah.
Yeah.
So can you speak just a little bit that, especially it's a big topic right now, but you're in the blue collar industry. And the momentum in America right now is that a lot of Americans don't want to do blue collar work like they used to. The flip side of that is you look at what blue collar folks are getting paid these days, and it's a lot more than a lot of tech jobs in some aspect. So can you just speak to I know it's only been a couple months, but what is labor like? And I would imagine part of you having to be successful is almost like making blue collar work cool to be in. Like, have you thought about that?
I've thought about it so much. So I can tell you like the big vision. This would be my dream. Ideally is creating this as like a destination type role, because the way I think about it, there's something I love about Amazon, and that is it's created more millionaires than any other entity in the history of the world. And so I love that idea of like kind of giving back and creating value for others. And I honestly think that especially in the skilled trades, and then, I mean, you could probably go to just about any trade, honestly, at this point. I think there's that possibility too. Like, how do you create something that is a path to maybe that first $1 million in revenue and make it sexy, like getting to run your own business? And so I do think a lot about that. I think about how do you start as a technician? I think about my time in the Army, where I'm like, okay, how do I get big enough where I could literally do like an Army or military recruiting, attack strategy on like high schools and like underserved communities and people that don't get, like the opportunities that you think, and show them a path of like, hey, you want to make 80K 2 years from now if you're willing to work hard and be kind to people, and are willing to learn. Well, you can do 80K in 2 years, okay? And then you want to see a path to 6 figures. You want to see a path to more than that. Well, this is how you do it. And so, for us, like, we're thinking about how do we make that path super simple of, hey, for HVAC specifically, here's maybe the 8 steps that you can be as a HVAC technician, an HVAC 1 or HVAC 2, HVAC 3, whatever. And you come in and you do so many calls on your own, you get that promotion to level 2. You get 10 5-star reviews, you get that promotion to the next one. So that's kind of the program that we're trying to create, because I think you have to make it so self-evident for people and then get them excited in the vision, because if they think they're going to do it without working hard, then like, I'm not really interested in it. And so, but how do I show you that this could be better for you than you ever thought, without the college debt, without, like all these other aspects? And one of my partners, he served like a church mission in South America. And he said, one of the coolest things about how they do business there is when you come out of high school, there is a fork in the road, and it is trade or it is college, and they are seen exactly the same. There is no devaluing or lesser than one way or the other. And we've created this narrative here that I think is completely opposite to that, where I'm not going to say college isn't valuable, but more and more companies are not requiring college degrees. And even in my last job, it's very similar in a lot of ways. Like, I did a high volume recruiting, and it was in real estate, so you had to get a license. So our strategy was, how do we find incredible humans, help them get licensed, and then have them start with us? And so I think we will have a similar approach through HVAC of, how do we find the most incredible humans that are willing to work, that are kind to people, and they want to learn and grow, and show them the path to 80K and then beyond.
Yeah. I think I said this on a podcast the other day. I think the next $1 trillion company is literally who can make blue collar work cool again in America. Because it's fun to talk about the metaverse and tech and all these cool things going on. But a real estate guy, I look around the world and I'm like, we have to maintain all this stuff that we've built. And at the end of the day, when your air conditioner isn't working, I think you would rather your Facebook account not work for an hour or, a day than your air conditioner not work for a day. And so the opportunity is enormous.
Really quick on that note, did you know, this is something I just learned recently, and it's super fascinating. Like, happiness rates of skilled trades is higher than just about any other job in the world. So
Interesting.
almost 90% show that they're satisfied or extremely satisfied. And that's based on like Angie's List, like 2021 research. And I just found that to be because they find the reason for satisfaction is they feel meaning and purpose in their job every single day. When I come and help a family who's dying of heat basically in Texas with little kids, like how can you not feel fulfilled after like helping them take care of that?
Yep.
And so I don't know, I found that like I think there's true purpose and meaning as people search more for that and realize that they can make great money, make an impact, and like have all the things.
Yep.
I mean,
there's just so many ways to improve the business. I mean, it's typically run by, again, no offense to boomers, but there's just not a lot of technology. It's very still like hop in a truck, show up, go to Home Depot, buy some parts. I'm not saying that's bad, but there's ways for the modern era person to enjoy the workflow throughout the day.
Sure.
Just real quick, so you're buying the actual service, let's call it the blue collar business, but then you're also building tech.
Yeah.
How are you building the tech? Are you building it? Do you have a tech team? Have you started? Like, how are you thinking about? Because it's almost like two different things you're kind of working on.
Yeah, they're going in parallel for sure. Because like the way I think about it is, kind of like a circle or flywheel of you have like the data, the tech, and the service. So like we need to build up the data library more or less, and then the tech enables that data to create great service. And then when the service comes out, then they're validating like more data. So as an example, if I gave you a quote for a new AC system for $10,500, so that's the tech, that's the service, or that's the tech that I just put out to you. And then I go out and service and I actually find out, hey, it's $11,700. I was off by $1,200. Well, that's not like a range of accuracy that I'm satisfied with.
Mm-hmm.
So that just feeds the data again, where it says, hey, based on this home, he has a 1980s, brick built, 3-bedroom, 2-bath, slab foundation. Hey, we need to add just a little bit more on that for next time. And then that, again, back to the tech, back to the service. And it's just like this
Flywheel.
beautiful, flywheel going back and forth. And so we are doing that concurrently right now where, the HVAC, the primary thing is just transition right now, transition, make sure we have full ownership in that, and then like small tweaks. And then we'll start, taking more pieces, but like we are taking the data down. Like, how do I start with something like an air filter subscription? So it shows up every 60 days, 90 days for you because I have the sizes, or you call in and I don't have to ask what kind of system you have because I already took the data down. And so, that is the approach of just the flywheel. And so the data, we have no tech team besides my partner. He knows how to code.
Yeah.
And I am dangerous enough to put like no code and some code together. So we're just piecing it together right now to validate, and then we will probably go raise money next summer.
There's a VC listening to this. Here you go. I was going to say, if you end up raising money, this is super interesting. I'd love to hear about it. I'll get just one thing came to mind. I wanted to tell you. I went to a thing called Singularity University in Silicon Valley in 2018 that Peter Diamandis puts on. It's the big moonshot guy. And he was talking about blue collar trade, and they had this whole session on what might get people interested in the future. And I'll never forget this. Maybe you've heard of this, maybe you haven't, but he was talking, I think the example they used was like an elevator technician, ThyssenKrupp. Currently, to become one of those, it's a lot of training. As the products are getting updated, you're constantly having to be retrained. It's a very specialized position, and it makes good money, but it requires a lot of work. And their whole thing, how they thought, they brought up augmented reality. And they said, what will happen in the future is you won't have to get near as trained. You'll just wear these glasses. And when you are looking at the system in the elevator, it will project onto you. The augmented reality will project onto the physical system, and it'll say things like, turn this dial, do this. And you'll just be following this kind of thing that the computer is telling you to do. And in reality, what he was saying is like anybody could become an elevator technician within a week, as long as you know how to follow it's almost like a game. And they'll be putting a lot of money into the augmented reality. So it just projects on. So when I think of like an HVAC thing, if a technician is out there on the field and they open up the motor box or whatever, and now this augmented is posted on top of it, and it's just saying, hey, move that wire here, do that here. I don't know what that means. Maybe it's something for you to chew on, but it made so much sense that, oh my gosh, one, it's like gamification, which we know the millennials and Gen Z love.
Yeah.
Two, it makes things like you don't have to put people through these 2-year trainings. And then every time the product updates, retrain. You literally just learn how to follow what the Augmented tells you to do. Obviously, that could be a long way away. I don't know. But it was one of the coolest ideas I've heard in a long time. And it makes a lot of sense.
No, that's amazing. I love the thought process there. I think I saw some tweet the other day and someone was like, man, for all these people building construction or skilled trade software out there, is like, have you ever been to a site? Because it like they never want to adopt it, right?
Yeah.
Like, and it's fascinating. And then you have like, obviously for an elevator or something like that, there's a lot of regulatory concerns as well. I love the approach, but man, I think there's part of just like humans problem solving.
Yeah.
That you just don't know, like the part's different than what you expected. And it's not a ThyssenKrupp, OEM part.
Yeah.
And so now the prongs are different places. So now they have to problem solve on their own without the AR. And like, I think that's where, I'll be fascinated to see how they kind of like, how do you overcome that?
Yeah. No, it'll be interesting. And to your point, construction companies or real estate companies not using the software, I joke all the time, like the majority of these prop tech businesses are being created by people that actually weren't in the industry before. They just like hear an idea like, oh, we need to fix construction management. The issue with like real estate in general is it's market by market, jurisdiction by jurisdiction. Everybody has different codes, different things.
So hard.
It's tough. All right, man, this is fascinating. Like, if you continue on with this business, I'd love to keep chatting. I think it's an amazing idea. Thanks for sharing on WeWork and what you're doing now.
Yeah, it was a pleasure. Thanks for having me, Chris.
How can folks get in touch with you? I know you're on Twitter if somebody's interested in what they heard today and want to reach out.
Yeah, Twitter. I'm trying to build my Twitter presence. I was posting exclusively on LinkedIn, and a couple friends were like, "Hey, if you did this on SMB Twitter, you'd get so much more of a like a relationship." And I've actually met, I think, more people on Twitter in the last 60 days than I have in doing LinkedIn for like the last 4 or 5 years.
Yeah.
So I've been blown away by that. So at Nate Lenahan on Twitter, or I'm very active on LinkedIn as well. So I share on both platforms quite a bit, and based out of Fort Worth right here with our Chris. And feel free to reach out.
Cool, man. Thank you very much.
All right. Thanks so much, Chris.